Got a hat today, hiding the crappy hair. Stepping up. All right, but what up, everybody? Today, this is gonna strictly talk about stocks today, my stock portfolio, how I go about trading, what I kind of look for. So to start off, I trade through apps. I don't have a personal laptop or computer, so I use apps to do my stock trading. That being said, my app of choice, even though based off of the history I'd rather not, is Robinhood, just because all of the widgets and things that they provide are actually pretty useful and convenient for me as a individual, inexperienced personal trader. So that being said, I will say this next: I am not a certified, I'm not a degreed, I'm not a legitimate financial advisor, nor is any of this stuff concrete stuff. It is just my opinion. Moving on from that, so Robinhood is my app of choice. The way that I choose to trade stocks, I have a three-prong approach. How I approach this is that the first prong, stuff that I don't really like, I just put money into, I haven't really worried about, would be cryptocurrencies. Okay, so that would be one of the three legs of my table. The second leg that I put stuff into would just be my normal ETFs, the normal stocks. So these are stocks that I get solely because of the dividend yield or the returns. So the idea I have for that is that these are stocks that quarterly or yearly are going to give me that passive small percentage growth. Now, am I looking to that to be my big ticket sell item that gets me all the growth that makes me a millionaire? Of course not. That's not the point of that. That is to have a consistent, growing fun money, I would say, because that's going to be that passive. That's what's going to come in every 3 months. That's what's going to come in every year. It's going to come in, and that's going to be like a mortgage payment. You know, that's going to come in like a bill, really, but it'll be the opposite because it's going to be giving you money. So with that, that is the second leg of my table. So far we've talked on the cryptos, and we've talked on the regular ETFs, the regular stocks. The last leg that I use for my three-prong approach for stock trading is options. Now, options, extremely risky. It's not something you should get into without doing thorough amounts of research in both how to do options and also what you're going to attempt options trading with, because there is a lot of variables within options. Now, because of those variables, there's a lot of opportunity for growth. There's a lot of opportunity to make money. All that strictly hinging on you making the correct bets. That's really the best way to say it, because options is betting. It's legal betting on companies, on businesses, on the U.S. in general. I mean, you can even put money into the U.S. dollar. So like that's another one. Foreign exchange, that is something besides stocks that someone could do. I could touch on that in a bit. My mom used to do that technically, and my grandmother as I was young. So that and stuff that my fourth grade teacher introed me in on are what gave me that beginner insight into stocks and foreign exchange, because it is a valid means of work. It is a valid means of making a day's money, providing. Because it's not as difficult as it seems, and it's a lot easier than you would think, unlike the casino. Now, I mean, everything's probability, of course, in a casino, but in the stock market, everything is numbers. Everything is attention. The stock market kind of works like social media. Whatever gets a buzz, people will flock towards, because everything revolves around money. Money makes the world go round. So if something gets some buzz, that means it's either getting money or it's losing money. But either way, it's going to have a lot of people there, and you want to be within that cut. That's how you get the money. So all this said, that is why options trading is the main resource for building my current stock portfolio and income. Now, will that continue to be? I would like to keep my stock portfolio at a 33%, as equally distributed as possible. So, with options being my main way of gaining capital in the short term, the idea behind that is that I would use my short-term capital gains from those options, either letting them close or selling them, and taking that money and reinvesting it 100%. Just dispersing it through the 33, the one-third the one-third disbursement that would reflect my entire portfolio. Currently, I had sold all of my cryptocurrencies. Now, that's because I got a big gamble on gold and oil right now. The economy is not in the best shape. It's obviously still pushing. At the end of the day, it's still an economy will still exist no matter what. Items will still need to get bartered and traded. There will need to be sales. Their goods need to still be produced. Goods still need to still move. Because whether the government shuts down or not, you got to put food on the table for your family. Now, is there going to be a table? Maybe, maybe not. Is there going to be, I guess, confirmed income ever? Not really. Sure, someone could get a comfy job, but that's as stable as the company is, as the area is, So the best way to be financially stable is to be financially independent. Now, one of the main ways people do that is stocks. The number one main way people do that is real estate, but stocks is another good way. Stocks, bonds. Now, I won't touch on bonds at all because I don't have any, nor do I have any knowledge or experience with them. But yeah. For someone just starting out, I would recommend trading penny stocks. Especially when you're first starting out, you're going to be very anxious. You're going to be very quick to pull the trigger. You got to take the time to go through those things, get that experience of learning when would be the right times to buy, when would be the right times to sell, how not to be so greedy, when to start looking for new possible, good stocks, when to limit yourself, how to keep yourself at a manageable level, not to overdo it, because the stock market is fucking massive. You, just like with anything else, you can overwhelm yourself. Like, you're not a supercomputer. You're not going to be able to run bets. You're not going to be able to watch the entire market. So fine tune it. Figure out the things that you are the most interested in and try and focus on those. Another good tip for someone starting out is, especially if you're just doing regular ETFs or stocks and bonds to start, would be to focus on the corporations and brands that you regularly consume from. So if you go to Target regularly, that's your place to get groceries. Target, Walmart, Costco, Sam's Club, all that stuff, they have stocks on the stock market. You like to go to this really, if it's somewhere really niche, if it's a mom and pop shop, more than likely they're not going to have stocks. But if they're a big company, if they got some pretty good branding, like Chipotle, Domino's, McDonald's, Burger King, these are all franchises that you can invest in. Definitely. Like when Chipotle first came out, if people would have invested back then, let's say just $10,000, you would have, I think it was, I am grossly misquoting this. I think it was $1 million that it would have been worth at this point, currently, just because of how much Chipotle rose. But that's just an example. Stocks go up, like the market goes in a circle, just like the jobs in America. People always say, especially people running for presidential candidacy or governors or anything like that, they always say, oh, I'm gonna create more jobs. It's bullshit. Always bullshit. No such thing as creating jobs. Sure, like a new kind of job can be created, will be created, but no one's creating jobs. You're just shuffling people around, right? It's the same amount of people in jobs, or maybe slightly less. I could have seen them increasing the numbers back in COVID days because of, it was COVID. You had to take the extra time, take those extra hits, because government is still paying out good checks for that kind of stuff. Now, not so much. Yeah. So, to loop back, get back on the stock topic, to finish off on what I was talking about. My portfolio is very much hinging its ETF stock bond and its options profile directly on very specific stocks. It's an oil stock and it's a gold stock. I don't want to... It's stocks that I've been watching for a while. So, talk about my little history, especially with one of them. It's a gold stock. The gold stock is... Ooh, I just saw someone getting pulled over. Police. Ooh, police activity. The gold stock, it's IAG, I Am Gold. Very nice stock, very good looking stock right now. They actually, I'm waiting to see their first quarter of this year's performance, I guess is the best way to put it. But that is something that's happening. Ooh, mail. All right. What? Yes, that should be hopefully very fruitful for me. I have a very big leaning percentage of my portfolio on that. The oil, I don't have that much, but I do have an option. It's been providing a good amount of profit for me, and I hope that continues. With how the market's been the last couple days of just this week, it's been kind of bumping back and forth. It's kind of been riding the mellow train, trying to plateau, but or actually slightly going down a little bit, but we're bringing it back. With that, we're gonna cut it off. Have a great day, everybody. Check back tomorrow.